Microsoft may have earned an unfair reputation for being a boring company that is difficult to understand. Granted, there is some reason for this given the tech company's continued growth in the cloud segment and a shift towards a recurring and predictable subscription revenue model. Let's check out Microsoft stock price prediction 2021. Number 6. Very shareholder-friendly policies for a software company. While technically classified as a software company, Microsoft is among the select few in its group that rewards investors with some form of a dividend. At current levels, Microsoft pays an annual dividend yield of around 1% of $2.24 per share. The math behind Microsoft's dividend payment implies it is returning around 30% of total annual earnings. Based on the company's large growth prospects in the cloud business, it would be reasonable to assume even larger dividend increases could be on the books in 2021 and beyond. In fact, Microsoft managed to increase its dividend payout to investors in September. If a company has a financial flexibility to pay investors more money during a pandemic, logic dictates it can be in an even better position to reward investors when there is no global health crisis and the economy fully recovered. This alone makes the case for a higher Microsoft stock price prediction. Microsoft has also been very active in buying back its own stock over the years. According to the most recent data, Microsoft has $26.4 billion remaining in its buyback program, and the company has a reputation of more than offsetting dilution caused by stock-based compensation. Number 5. Stock price forecast. The 30 analysts offering 12-month price forecasts for Microsoft Corp have a median target of $280 with a high estimate of $315 and a low estimate of $230. The medium estimate represents a plus 15.15% increase from the last price of $243.17. Over the next 52 weeks, Microsoft Corp has on average historically raised by 23.2% based on the past 34 years of stock performance. Microsoft Corp has risen higher in 22 of those 34 years over the subsequent 52-week period, corresponding to the historical probability of 70.97%. After gaining nearly 9% since the end of fiscal year 2020, ended June 2020, Microsoft stock is at its near-term potential. MSFT stock grew from $204 in June 2020 to nearly $222 currently, compared to the S&P 500, which gained 20% in the same period. The company has seen a high revenue growth over recent years, and its PE multiple has also risen. We believe the stock, after the recent rally, is fairly valued. We expect Microsoft's revenues to grow by 11% to $159.1 billion in fiscal year 2021. Further, its net income is likely to rise to $51 billion, increasing its EPS figure to $6.71 in fiscal year 2021, which, coupled with the EP multiple of 34.3 times, will lead to Microsoft's valuation around $230, up 4% from its current price. Number 4. Growth in cloud computing. Software giant Microsoft MSFT has earned plaudits from its successful pivot from desktop computing to cloud computing, and MSFT stock has risen as a result. Due to the COVID-19 crisis, many organizations and individuals shifted towards digitalization and cloud services. This led to Microsoft's revenue rising by 13% to a consolidated figure of $147 billion for the last 4 quarters, from the consolidated figure of $129.8 billion for the 4-quarter period before that. For quarter 1 2021 ended September, the company beat consensus estimates for revenue recorded at $37.2 billion, up 12% year over year, and earnings recorded at $1.84 compared to $1.40 in the same period of the previous year. Further, the company reported $19.3 billion in cash inflows from operating activities for the first quarter of fiscal year 2021. What we can learn from this is that Microsoft has a prodigious talent for shaping and reshaping the world we live in. For others in the industry, Microsoft must frequently have brought in mind some words once written about IBM, that it was not so much the competition as the environment in which everyone else had to operate. This ability seems undimmed in our own time. Along with the better-known Zoom video conferencing service, Microsoft's Teams has seen great demand during the coronavirus pandemic. Number 3. Microsoft Stock Fundamental Analysis. Late January 26, Microsoft crushed Wall Street's estimates for its fiscal second quarter ended December 31st, thanks to growth from its cloud computing businesses. It also guided higher for the current quarter. Microsoft stock rose 0.3% on the news the next day. Microsoft earned $2.03 a share, up 34% year over year, on sales of $43.8 billion, up 17% in the December quarter. Analysts expected Microsoft earnings of $1.64 a share on sales of $40.18 billion. The report marked Microsoft's second straight quarter of accelerating earnings growth. It also was the company's fastest sales growth in 9 quarters. For the March quarter, Microsoft expects sales of $40.8 billion, up 16.5%, based on the midpoint of its outlook. Its guidance implies earnings per share of $1.75, up 25%. Analysts had predicted Microsoft earnings of $1.58 a share on sales of $38.7 billion in the company's fiscal third quarter. Microsoft has benefited from the work-from-home and learn-at-home trends during the COVID-19 pandemic. The trends have spurred an increase in PC buying. Also, Microsoft's cloud software and services are aiding at-home workers and students. Number 2. Microsoft Stock Technical Analysis. On January 26, Microsoft stock touched a buy point of $232.96 out of a 22-week consolidation period, according to IBD MarketSmith charts. It hit a record high of $245.09 on February 3rd. Microsoft stock ended the regular session February 8th at $242.47. Microsoft stock has a subpar IBD relative strength rating of 47 out of 99. That means it has outperformed 47% of stocks over the past 12 months. The best growth stocks technically have RS ratings of at least 80. The IBD stock checkup tool gives Microsoft stock an IBD composite rating of 92 out of 99. IBD's composite rating combines 5 separate proprietary ratings into one easy-to-use number. The best growth stock have a composite rating of 90 or better. Number 1. Is Microsoft stock a buy right now? Intelligent Cloud led the revenue growth recorded at 24% year over year, while the personal computing and productivity and business processes segments saw revenue increase by 9% year over year. It picks Microsoft as the number 1 AI company in the public cloud space. This is thanks to the company's rapidly growing Azure cloud platform. We believe Microsoft is in an inevitable position versus other public cloud competitors, as their customers can also leverage AI and ML capabilities on-premise, something Amazon's AWS and Google's GCP can't deliver natively, said RBC Capital. Also note the stock's killer strong buy rating with 20 out of 21 analysts bullish on the stock's prospects. Top this off with a $153 average analyst price target for upside of 17%. I would say Microsoft is one of the most appealing tech stocks to buy and hold on to. Microsoft stock is trading in the buy range of its recent breakout. The 5% chase zone extends to $244.61. In a positive sign, Microsoft stock is trading well above its 50-day moving average line. Microsoft stock is an IBD accumulation distribution rating of B-, indicating institutional buying. The rating on an A+ to E scale measures institutional buying and selling in a stock over the past 13 weeks. Do let us know in the comment what you think of this amazing tech stock. Please subscribe to the Stock Advisor. Thanks for watching.